This presentation would normally take about a half hour, 25 minutes, I suppose. As I go through it, I'm going to try to probably give you an idea of kind of what we mean on some of these slides, what we're trying to, the need we're trying to create, kind of the meaning behind some of the slides, just to kind of help you. I'll talk about some situations when to hit on this or hit on this particular part of the presentation, but mainly just to listen to someone that's given the presentation to go through it is invaluable. So a little bit about myself. My name is Jeff Clark. I've been with GoldenCare for 25 years now, 26 years. Mainly as a regional director. So my job on a weekly basis is to recruit, train, compare and contrast products, go over products, selling ideas, marketing campaigns, essentially to help agents write more business. Now, I can tell you personally, I've never stopped writing long-term care. I was in the career shop. I used to work only long-term care. It's what I cut my teeth in the industry here, in the insurance industry on, is long-term care. I eventually learned med sups, annuities, and other things as they presented themselves, but I started with long-term care. This was back again in 97, 96. So essentially, back then, we had a variety of carriers, and it was pretty easy to get things issued, but you still needed to create the need. So over the course of, I don't know, the last 25 years, I guess, I've written 780 long-term care policies. I still have 600 some on the books. So this particular presentation I'm about to show you is what I used for a bulk of it. It's a great presentation. It's a proven track to run on. It's not the, probably not going to be your top of the line technologically. Tom Randall just gave our pivot presentation, which actually, as people ask you questions, as people tell you about their health, you can pivot out of this missing link to go to different questions. But we still wanted to give the actual presentation itself just so you guys could hear the thing and see how it flows. And so that's the kind of the idea today, is just to give you guys an overview of the missing link. And again, this particular presentation has sold, I don't want to put a number on it, 300 million, 400 million of long-term care premium. At what point it was selling close to $1 million a week out there. And so it's been changed. It's been, it's gone through different adjustments as things have changed out there. But what essentially does, it gives you a track to run on and explains things and how to naturally progress the people through the concept of buying long-term care. So, and I'm trying to buy time because my screen's not moving. There we go. I'm going to do it by mouse, I guess. Okay, we'll do it by mouse. Okay, first of all, and this is something I've been harping on personally to all of my agents, just some COVID stats here. And we're not supposed to use scary stats to scare people and do it, but you know what? Throw that out the window right now. This is COVID. COVID is such an incredible animal out there that it's changed the way people look at long-term care. We have never seen, in my 25 years, I guess, I have never seen the interest level for long-term care since we started this COVID campaign. 3/4 of people who died, it says here in Canada, I find this very interesting, 73% of Canadian deaths attributed to the pandemic were in long-term care facilities. Same in America, except for in America, we play games with numbers. It's politicized. Who died where, who died here. If you know, Governor Cuomo, of course, was kind of cooking the books there, saying that none of the people died in the nursing homes. And if they died at the hospital, they called it a hospital death, not a nursing home. Hey, we know where the problem is. It's with the elderly. We also know that about 3/4 of people that die from this thing are in facilities, nursing homes, assisted livings. People are terrified. Just look at it this way. Of people receiving their care at home, only 3% contracted COVID, and only 1% of those people died. People receiving their care in a nursing home, 37% of those people got COVID, and 11% of those people died. So it's basically, you're 10 times more likely to die from COVID if you're in a facility versus cared for at home. Does that make people want to stay at home? I mean, we already wanted to stay at home anyways, right? People didn't want the idea of, going to a facility with their kids, having a stranger care for them. So just imagine when there's an extra incentive of saying you're 10 times more likely to die from a virus. So actually 11 times the math there. 61 of people surveyed, 61% of people out there would rather die than go to a nursing home. I could tell you a bunch more, but right now, 87% of Americans believe it's more important than ever to plan for long-term care. So I go through this slide. There's a lot of stats like this out here. We can send you information on this line if you want to help start the conversation with your customers. Because I promise you, they're waiting for someone to talk to them about long-term care. They're not maybe crazy about, they're going online, they're poking around. We're getting more internet leads than we've ever had. And so people out there shopping, they're asking, there just isn't enough long-term care agents out there to handle this demand. So if you are in this arena, if you're looking at maybe selling more long-term care, I promise you, as you're going through Medicare, it's open enrollment season right now, or annual enrollment period. Ask your clients about long-term care. You'll come back to them after the enrollment and give them. People are deathly afraid of COVID, and they want to hear about long-term care right now. I hope I've harped on that enough. The opportunity is huge right now. I've never seen it better. Okay. The missing link. Again, this is just more or less some things. Clients are terrified of nursing homes. They're waiting for you, the agent, to talk to them about this. So for you to think that it's hard to bring up long-term care, just lead in with COVID. People don't want to go to facilities anymore, even more than they didn't before. Okay. Also, the Washington State, I'll touch on this. Washington Long-Term Care Trust Act, WA, Washington Cares. This is a thing where they're forcing all the residents of Washington State to have long-term care. If you didn't have a long-term care policy enforced by November 1st of this year, you're automatically having a 58 cent per $100 of earning tax coming out of your paycheck. Anyway, so this Washington, we're going to see more and more states do this. So this really, really stirred up people looking at long-term care. So suddenly they're saying, look, I'm being forced to buy it. And the plan that the Washington State Trust Fund was providing is not portable. So if you pay it your whole life and you move to Florida to retire, you don't get to take the coverage with you. It's not very good. It only buys you a $36,000 1-year benefit, $100 a day. So if people were to go ahead and just buy it on the same amount of money spent, they can get twice the benefit buying in the private market. So as more and more states maybe force long-term care insurance on their residents, this first one wasn't handled very well in Washington, but the one thing it did do is it stirred up a lot of talk about long-term care. So we are really seeing a resurgence in long-term care, COVID, and as these states start to kind of mandate it. All right, the missing link at long last. All right, I guess we do have a lot more people who come in now. So this is the presentation that has sold, again, millions of long-term care. I'm going to walk you through this thing. I don't know, I've probably given this thing several hundred times. There's always new slides being added to it, but I'm going to walk through this here and try to tell you kind of what the meaning behind the slides are in some places. So without further ado, let's go ahead and go through this. So what's the agent's role? Again, I'm kind of talking to you, the customer now. All right, so I'll be kind of shifting between talking to you, the agent, and the customer. So when I'm talking to my customers here, I explain to them what my role is as an agent. Okay, my job is to understand long-term care industry, inside out and backwards. I understand all the carriers, the legislative stuff going on, and that's my job. Research the companies, know the best policies, represent these carriers so I can give you lots of different options that make good sense for you. I'm going to do the shopping for you. Steps to process. First of all, we're going to find out today if you can qualify for long-term care, because that's the biggest issue. And this is where I'm going to pause it. This is where that pivot presentation that Tom Randall gave last week, that as we go through, the first thing you want to be doing with folks, find out where their health's at. If they tell you basically, because we do so much internet selling now, if they're telling you right away at the offset that they, have lupus, they've got, they use a quad or a 3-prong cane, they're already, receiving care. We got to ask some questions to see if they can qualify for long-term care, because quite frankly, it's hard to get traditional long-term care insurance. You got to be pretty healthy. You can't have had cancer or knee replacement or anything in the last year. You've got to be pretty much no pending surgeries. So we really want to qualify. We talk about when I sell them, I guess I'm often talking about if you can qualify for this. What I want to do is middle of the presentation. If that person suddenly stops me and says, well, Jeff, what do I have to do to qualify? Well, then I know it's a buying signal, but I hit them as I go through a lot. Well, again, if you can qualify, I'm almost taking away from them as I'm going through it. So first of all, we're going to find out if they can even qualify for it. Then we're going to find out if they need it. Maybe there's someone who doesn't have any assets. They're not suitable. Then I'm going to educate them about long-term care. And after having gone through all this, I can design an affordable plan for them. And then all I can do is help you get started. I can't sell you long-term care today. I wish I could, but we got to fill out an application. The underwriters got to look at you. And 50% of people applying for long-term care right now are being declined. So all I can do is start the process today. So can you qualify? Then we start kind of asking some telling questions here. Have you ever been hospitalized the last 5 years? Are you taking any prescription drugs? We're looking for knockout medications, things like this. And remember, in this pivot, the same presentation you're watching right now, if they answer some certain questions, we can pivot here in the lower right and we can adjust to a different plan that we're going to be presenting at the end. Yeah, really, really, really nice. We'll touch on that again in the end. All right. Do you need coverage? So the state law is going to require that I go through, ask you some pointed questions about your income and assets. Naturally, folks, we don't want to sell someone long-term care insurance if they have zero assets, if they have, a couple $1,000 at the bank and they only have a Social Security income. Okay, they're going to fall on Medicaid pretty quickly. They would need to buy a long-term care plan. So we're going to go through their income, their assets, and see if this is something that's right for them. Then we're going to explain to them your major health care. If they're under 65, your major health care right now and Medicare do not pay for skilled nursing care, especially the Medicare beyond days 100. Matter of fact, this 100 days of skilled care. So as it stands out here in the land, private insurance, when people are working through their, they don't have coverage for long-term care. They have short-term hospital stays, a couple rehab visits, some physical therapy, but nothing that's going to pay for them to be in a nursing home for a while. Medicare is even worse. So in Medicare, you're often going to see days, 1 through 20 are covered by Medicare. Days 21 through 100 are covered by your Medicare supplement or Medicare Advantage. So essentially with Medicare, you have coverage for up to 100 days of skilled nursing home. Let me tell you how rarely that happens these days. At this point now, when you go to a nursing home, as soon as you've leveled off, in other words, physical therapies are working with you, therapists, as soon as they find that you're not really improving much anymore, after 2 or 3 weeks, that's it. You're out and you're going, then you're no longer being covered by Medicare. And, I can tell you this, folks, when I'm talking to my clients, I tell them I could scare you, but, with a lot of the different Medicare cuts that are coming, but it's the writing's on the wall. Is Medicare, this is how I used to put it. Do you think Medicare is moving towards paying for more and more care for people? Or do you think that as the baby boomers come through and we run out of able-bodied people that are working, paying into the system, and we explode as a senior population, do you think Medicare is going to pay more or pay less over the next 10, 20 years? Everyone knows Medicare is going to start paying less and less and less. So when I go through this health insurance, what doesn't pay, I make sure they know that, hey, this is on you. There's nothing in your health insurance. You might be thinking that Medicare somehow pays or the government's going to take. I'm very clear with them. This is not going to get covered. Currently, you have no coverage for long-term care. You get in a car accident tomorrow and you get laid up and you're going to be a quadriplegic for the next 20 years. There is no coverage for that. You have a stroke at age 59. And, maybe at that point, it's a real bad one. You're not going to come out of the nursing home. You're never going to regain the use of the left side of your body. You're going to need care the rest of your life. That's just not covered. So, okay. Why is it an issue today? Because we're aging. I guess I've already touched on this, but we are aging at an alarming rate in this country. They said 10,000 Americans turning 65 every day. The first baby boomer turned 65 in 2011. There's an explosion over the next, between 2000 and 2007 and 2030, a 90% increase in the 65. So it's doubling, basically. We're in the midst of it right now. Said another way, when I started out my presentation, and I didn't do this today, and I apologize, so I'm going to just talk about why is this an issue today? The aging of America. Before I got real started into my presentation, I would tell a little story. I guess I kind of like stories, or I got that from Mark Randall, my mentor, and I heard him tell this story one time before he gave a presentation, and I thought it was very powerful. He said that, look, why is this long-term care an issue? The aging of America. Right now in this country, we have such a tidal wave of care coming. If we were to stop every single carpenter, every sheetrocker, every roofer, every masonry, and we stop them from building houses, we stop them from building churches, we stop them from building hospitals or roads or any other building, any supermarkets, Walmarts. If we took every single 2x4, every single nail and every single hammer and every single, again, worker and raw material out there, and we rounded them all up, and all we did is build nursing homes. That's it. We would never be able to build enough nursing homes to handle the tidal wave of care that's coming down the pike for us. So what's happening? You're seeing hotel chains like the Marriott Courtyard, the Staybridge Inn by Holiday Inn, Marriott's or the Hilton's got their Homewood Suites and their other ones, Doubletree. You're seeing these hotels. They're not building high rises anymore. They're building like 4-story hotels that have their own built-in kitchens, little kitchenette, little living room. They've got a separate bedroom and a kind of a living room. That's the model of hotels now. Why? because they're all going to be converted into assisted living and nursing homes. All these buildings, Marriott's, Courtyards, all the hotel chains are doing it. Cruise lines. I used to think this was kind of a joke when I first heard about it, but no, Princess Cruise Lines, Carnival, their old ships, they're converted into assisted living buildings. Why? Because they've already got laundry facilities. They've got a full kitchen. They've got everything that you need. Doctor's offices and they've got everything you need to be. And quite frankly, we don't have any place to put these people. So you're going to see a completely changing landscape to try to take care of this tidal wave. Now, I tell that little story because it really paints a picture of why long-term care is an issue. You know, when Medicare started, there was 11 people working, paying into this system for every one recipient. Now, there are a little over 2 people working and paying into a system for every one recipient. And the recipients are using twice the dollars they used to when they wrote it 50 years ago. So quite frankly, there's nothing to be able to take care of the tidal wave of care is coming. We don't have places to put them. We don't have the able-bodied caregivers to take care of them. The care at some of these nursing homes right now, the patient to nurse ratio is terrible. With COVID, nursing homes can't afford to keep their staff there anymore. It's hazard pay, it's time and a half. They have extra private safety gear they have to wear. Separate rooms, plexiglass, shields, all the things. I read somewhere else that 89% of nursing homes are going to go bankrupt in the next 3 years. Folks, we have an incredible problem on our hands. And the only solution, because it's not insurance, it's not Medicare, is long-term care insurance. It's the only way to take care of this, to guarantee that you're going to be taken care of, and you're going to be able to pick the kind of care you want. Legislative changes. The U.S. government's aware of this is coming. There's a problem coming. In 2002, the federal government began offering long-term care to their 22 million employees. It was actually a Hancock plan to begin with. It wasn't great coverage, but it was something. It at least got the word out there that long-term care is important, and we're going to start offering it to our employees. There was tax incentives. And, you know, most states at this point, most states offer you a tax deduction and offer the federal deduction. I don't like to give the tax advice on that. I usually have brochures that can tell them exactly how they conduct it, whether they're C Corp, S Corp, individual, LLC, et cetera, et cetera. We have all that stuff for you. Give it to their tax people. States began to honor these incentives. They also started an educational program called Own Your Future. If you remember this, it was probably back 10 years ago. The governor of each state would actually send out a hand-stamped letter telling people that, look, we're broke. We can't afford to pay for you in nursing homes or assisted livings. You need to plan for your own care. Deficit Reduction Act of 2005, sweeping legislation that said no more people transferring their farms or their assets into their kids' names and able to become eligible for then welfare or Medicaid. So let me see, let me transfer this $1 million farm out of my name, and then I can qualify for Medicaid. The Deficit Reduction Act, that was always kind of illegal. There was a 5-year, 3-year look back, but everyone kind of just still did it. Well, the Deficit Reduction Act actually put some teeth in those laws. If you transfer $1 million farm, let's just say care is, I don't know, 100,000 a year, you're ineligible for any help for 10 years. So, you know, whatever your asset you transferred away, and by the way, there's no more look back periods. 3 years, 5 years, it doesn't matter. They're retroactive now. The Deficit Reduction Act says more or less, if we can find that you've transferred $1 million 7 years ago to somebody, and now you're on the state, you're receiving care. Here's the other problem with this whole transferring nonsense we hear about. And this is something I would tell my clients, and I don't know, you can share it with your clients if you'd like. As far as this, I'm transferring my assets. I'm going to hide these things. I'm going to hide my assets so that I can just have the government take care of me. And okay, a couple problems there. Let's just say you are someone, a senior couple that in your 70s and late 60s, and you know, you got $1 million, maybe 1.5, you got some land there, you got, you know, the house, you got some assets. So I'm going to transfer all my land and the house into my kid's name. It's 1.5. So what's happened? Now you put your children in a higher tax bracket. So now they're still probably earning income, right? Well, so now they're paying $1,000, $2,000 more in taxes or more, $4,000 more in taxes. Your grandkids, their kids are now ineligible for any grants or student loans, things like that. And that daughter-in-law that you maybe never really trusted, if she divorces your son, you just lost half that $1.5 million land and assets. Okay, so you're increasing in taxes, you're losing eligibility for grants, you lost all control. Instead of having your children pay an extra $4,000 in taxes, take the $3,000 or $4,000, buy a long-term care plan, get the tax deductions on that, so the real cost to you is like $2,000, and protect everything you got legally. So, and even if you could, somehow transfer all these assets away, and some lawyer tells you, oh, I'm better, I'm crafty, I can hide from the law. You transfer 1.5 million away, then you're asking for Medicaid or welfare coverage. A system I was just telling you is so overburdened that you're just not going to want anything to do with that 15 years from now. So I would look at some of these people saying, first of all, you're shooting yourself in the foot. You're spending more money than it would be if you just bought long-term care, and you're setting yourself up for the worst possible care you could receive. Not very smart. Okay. Death reduction, I already covered this. Again, sweeping legislation that more or less for all these people that want to try to, hide things, whatever. And listen, even if you could, tell that story I just told you, because that's the reality of it. Even if it isn't illegal or not legal, or you can somehow hide from the law. And, Medicaid, by the way, quit being a dirtball. Medicaid was designed to help the truly needy and poor. So you're proud of yourself that you're going to hide $1.5 million and then go take advantage of an overburdened system where there are people who actually need it? Just think about that on the surface. Don't be a dirtball, do the right thing. So anyways, that's deficit reduction. Doesn't actually have some teeth now. When people are trying to hide their assets, it just doesn't work anymore. All right, so who needs long-term care? A lot of people are surprised to know that 44% of people that need long-term care are under age 65. My brother-in-law had a stroke at 59. He was taking the boat out, just cranking that little hand crank there and bringing the boat up, and he had a stroke. Later, he had got some cancer, and so he ended up being in the nursing home or needing care for the rest of his life. He actually just died last year at 66. So, this guy didn't really expect that coming at 59. Wiped my sister out. It was just terrible. And I sell long-term care. Not that they could really afford to buy the premiums per se, but I could have maybe gotten them a home health care only plan, or just so hard to see coming. So believe me, people who are under age 65 are almost half of the claims and half the people who need long-term care. So it's not just for old people. All right, so where is the care provided? Another interesting stat here, or slide. 84% of people receiving care are at home, right, in your community. Maybe it's, Meals on Wheels are bringing some things. Maybe they're having a home health aide come by the house a couple times a week. Maybe there's a child over there helping with grocery shopping. Maybe the neighbor kid is shoveling the driveway. The church is bringing some meals. So 84% of people are receiving care in the community. So that's 16%, of course, in the nursing home. So it is important to know that people are trying to stay out of that nursing home. Stability. We just inserted this slide because it was actually talked about in the pivot presentation. And the reason I wanted to put it in here is because a lot of people, the financial planners, will get in your clients' ears and say, yeah, but those long-term care policies, they're going to have rate increases. They had rate increases, and they're right. If you look at policies from 20 years ago when I started, my clients have had 30, 40% rate increases, 50% rate increases, and they get mad about them. They get mad about them until I tell them what the current rates are. I'm saying, even though you've got a 40% rate increase and then you got another 40% rate increase, you're still paying about half of what policies go for at the age you bought that from, however long ago. So the long-term care companies have increased their prices. They've almost doubled the price of this stuff from what they used to charge 15 years ago. The reason I say that is because stability now in these rates, these things are pretty much, they're way different than they were in 2000. The Society of Actuaries actually gave long-term care policies in a study done in 2014 a 10% or less chance of having only a 10% rate increase in their lifetime. So look at, back 20 years ago, 40% chance of having a 40% rate increase. That's big. So they've cleaned a lot of this up. Long-term care premiums are very stable now because they charge a lot more in premium. They charge a lot more for the inflation premiums. They have something, I don't know the number here, something like 7 to 10 billion in claims they paid now. They're paying, I think, just Genworth alone is paying 7 million per day in claims. So there is a lot more data to go on now than there was when they first priced these things some 20 years ago. They didn't really know what they're doing. So as far as people saying, yeah, but long-term care and rate increases, just know that the rates are a ton more stable. And I've got more information on this if you need it for your clients. If they're looking at a hybrid, for example, that way, those are guaranteed life insurance policy. It's going to have a long-term care benefit and a life. Another topic, but if your clients are looking at one of those, ask them kindly to take a look at a long-term care plan. I'll tell them about the stability of the rates, and then we'll set them up like a second to die life or something, and we'll do the hybrid basically a different way, and it'll be about half the premium, and they'll get a lot better policies. But so anyways, policies are very stable today. Okay, so what brings on the need for long-term care? Acute needs. Diagnostic related groups. Hospitals get paid. This is, again, a little deeper dive into Medicare, but it kind of helps paint the story of why then you need long-term care. So hospitals are reimbursed from Medicare on this diagnostic related group thing. So, you've heard the expression, you don't keep folks in the hospital very long anymore, and they don't. So, a diagnostic related group, if someone has a heart attack and gets hauled to a local hospital, first, the diagnostic related group on that one, cardiac arrest, is 3 days. So that means that hospital is going to get reimbursed from Medicare. Let's just say it's $1,000 a day to be there. Medicare will immediately cut that hospital check for $3,000 on the first day he checks in with that heart attack. Now, what if that hospital is able to get him on his feet and get him out of there in 2 days? Are they going to send the $1,000 back to Medicare? Of course not. Sometimes they can't get someone on their feet within 3 days, and they end up having them there for 4 days with the complications, and now the hospital loses money. So you better believe with these diagnostic related groups in place, they are trying to get you out of the hospital as soon as they can. This is why you're landing in places like rehab centers and nursing homes, and it's why it becomes more and more of an issue. So the first is the acute needs, the easy things, the cardiac, the hip fractures. The second one is the chronic needs, and these are, again, Alzheimer's, arthritis, osteoporosis, diabetes, kidney, circular, major strokes. So there are just a lot of ways that you can end up needing long-term care. And remember, less and less of this is covered. So here are the odds. Every presentation you have to have odds. They kind of bore me, but I hope that the fourth one down is my biggest one, I guess, when I was in the field. But 60. Most Americans turning age 65 will need long-term care services at some point in their life. Women are especially at risk. 80% chance of needing care. 80% of admissions into nursing homes are women. Women are, especially single women, pretty much 80% of them. It's not a question. When you're talking about 80%, and then again, we'll look at the fourth stat down. Women's care is longer. They're more likely to do it. But if you look at a married couple, husband and wife, 90% chance that they're going to need long-term care. So when I talk to folks, part of these stats are all part of it. It's not a question of if. I guess when I talk to my clients, I was very direct with them. I would not say, if you can qualify, it's going to cover this and that. If you can qualify for this, it's going to cover this, it's going to cover this, it's going to take care of that. And I mentioned, I kind of tease them with that if you can qualify. But I would tell them, when you need long-term care, how are you planning to pay for it? How are you planning on dealing with this? Are your kids moving in with you? So when you need the care, I would say when you need it. I never said if you need care. If you need this is what could happen. If this happens, this could. I never said that. When this happens, because let's face it, you're not getting out of this. I'll be in 10 houses a day. 9 out of 10 are going to need care. This is coming for you, and it's very expensive. So 70% of claims are at home. 87% of people needing care in their community receive it from unpaid family care. That last stat's interesting too. Know that once people start needing care, Medicare help drops off right away. So now you have, and I can relate to this. I took care of my dad for 3.5 years, with helping with bathing, helping with grocery shopping, paying his bills, doing his meds, dressing, changing his sheets, you name it. I did that for 3.5 years. 87% of people getting cared for at home are relying on family and friends. So you don't want to be a burden to your families. I walk through these stats with them. Okay, averages. We all know that nursing homes are expensive. Nursing homes, $290 a day for a private room, $255 for a semi-private room. Assisted livings are $4,300 a month on average. Home health care can be about $50,000 a year, $150 a day. Costs are enormous for long-term care, $93,000 a year. And by the way, when we design plans, we don't design plans that pay $93,000. We try to design plans that pay $60,000 or $50,000. In other words, we're trying to take the bite out of this, cover for assisted living. We're not trying to insure the whole thing. We're just trying to keep them out of their assets, keep them out of their nest egg. Okay, so who really pays? Notice that right now people think that their private insurance, their Medicare, is going to pay for this long-term care need. It's less than 5% of the time. It's only the short term. It's the first 2 weeks, 3 weeks. Medicare covers 13%. Veterans pick up some help for some of the veterans, as long as you're low-income veteran and have at least a 50% service-related disability, you'll get some nursing home help there. Other than that, look at here. This is who's paying for it, private people. That's a lot of money, folks. That's, again, 60% of people are paying out of their own pocket, and they're wishing they had some help, relief. Okay, here's a nutshell. And I love this slide. There are 3 ways to pay for long-term care, and there are only 3 ways. Be very rich, be very poor, or be insured. That's it. If you're at the poverty level, you're already at Medicaid, you're going to get some help from the state. Okay. If you have any money at all, they're going to take the money from you, and then you're going to be in the state. Or if you have a ton of money, good for you. Still don't think it's a good idea to spend all your money. There's a slide for that. So be very rich, be very poor, or be insured. Anyone in the middle should be. Here's a great slide. Okay, walls around your state. And there's a couple of variations of this slide, but I love this slide. What is it telling you? So most people carry home insurance. They carry, they carry fire and homeowners. They carry car accident. They carry health insurance for major health problems. Naturally, they're going to have that, right? So what are the odds? Fire or tornado, homeowners, car accident, auto, heart attack, major medical, long-term care. Look at the odds. The chance of your house burning down is 1 in 1,200. The chance of you getting a car accident and not being insured, 1 in 240. The chance of you having a major heart attack without insurance, or if you didn't have insurance, 1 in 15. Chance that you're going to need long-term care, 3 to 4. It's not even a 1 in. It's 35%. It takes your car, your investments, and your house. It takes everything. It is by far, in a way, the most likely. It is going to happen, and it's going to take away all these things. So people aren't going to. They'd never go without car insurance or home insurance. Granted, if you have a mortgage, you're required to carry it. I get that, but once your house is paid off, so what would you insure first? I mean, if I'm at the horse track and I have $100 and I have to bet on something, I'm betting on the guarantee, right? The 3 and 4. I'm not going to bet on a 1 in 1,200. So, anyways, interesting slide here. It's very likely that these people are going to need long-term care. So, why people buy it? And this is another one I used to hop on this slide here because it's toward the end of the presentation now. We got 3:30 because I'm getting through a little quick. Why do people buy long-term care? Folks, I can tell you as an agent, you don't want to harp on protection of assets. I remember when I was young, early in my career, I just didn't get it. I talk about the fact that, you're going to lose all your money. Your kids won't get anything. All these parents would be like, yeah, my kids are doing better than I am. What do I care if I get the farmland or they get the 60,000 I have on my CDs or the whatever money I got laying around or what you really want to sell on is choice independence. Later in my life, as I started taking care of my dad and kind of figured more things out, I realized how much of a burden that was. I had to quit coaching football. I didn't really get to spend much time with my young boys at home. I had 3 boys, a 6-year-old or a 9-year-old, 12-year-old, and a 15-year-old. I would be at my dad's probably 3 days a week. And again, I had to quit coaching football. I coached 2 football teams for many years, basketball teams, you name it. I had to give all that up. I had to take care of my dad. No choice. Go there every day after work. When he'd get out of the hospital again, or he'd slip and break his back, it was another 5 days a week for a while. And so, when you look at why people buy long-term care, it's number one is because they want to be able to pick where they're going, who's caring for them, how much care they're getting. They don't want to get dumped into an overburdened, understaffed facility, especially with COVID right now. It's not hard to tell people, would you want to call the shots, or do you want Medicaid telling you where they're going to put you because you have no coverage and the 60,000 you had laying around got wiped out in 3 months? Now you're on the state. Or do you want to take some of that money and have some say in where you go? That's why people buy long-term care. Choice independence. Second thing is, are you moving in with your children? Or are your children moving with you? Well, my kids have a job. They can't do that. Or they do. Have you talked to your kids about this? I'd ask them. Well, no, but it's kind of, it's assumed. So you're assuming that your daughter is going to quit her job and move in with you. So you talk, how far does she live away? Oh, she lives a couple hours away. Okay, so how's that going to work? Does she have a family? So I would get in there and I guess without trying to be a jerk, I would try to hit him over the head with it. Really? So have you talked to your family? What is your plan? Are you just going to move in with them, or where do they live? So trust me, parents do not want to burden their children with this. That's the number 2 reason people. The third reason is they want to, they'd like to see their assets go to their kids. They'd like to hang on to the money they worked and saved and built up their whole lives. So why people buy it? Choice independence is why. And I used to then ask people right here, what would be your reason? I'd pause and I'd Well, yeah, our kids work full-time jobs. They can't. They wouldn't be like, well, no, I don't want anyone telling me where I'm going to be cared for. I would let them talk for a while at this slide. I would just kind of pause. I would ask them, what would be your reason? What would be of these three? What do you think what resonates more with you? I get a lot of pushback. I get a lot of not pushback. I get a lot of volunteering here. They kind of tell me at this point, kind of go into the position where they're at. I haven't really tried to close or anything, or all these things I just hit them with. How expensive it is, how likely it is, why people do it. What would be your reason? Oh, well, okay. It's been a while since I've given this, but I'm getting ahead of myself. Yes. What would be your reason? So give yourself choice of quality, maintain your personal independence, avoid burning your children, protecting your savings, pass on a legacy to your heirs, avoid impoverishing your spouse. Which one's important to you? And so I literally make them look at this slide. Sometimes men, I'm going to pick on us men here. You get the guy there, he's got his arms crossed, he's leaning back from you. But the wife, she's 6 years younger, she already sees the writing on the wall. Maybe if they're in the same age, guys tend to go quicker. The woman takes care of the man, and the woman's end up alone. So when I talk about avoid impoverishing your spouse, I'm looking at that guy with his arms crossed. He doesn't want to do long-term care. Maybe she is younger. So he's taken care of. He already knows that. And after that, he figures, I don't know. So you really want to ask them, what are you planning on doing with your children, with your assets, with your heirs, with your own choice of care? What do you see happening here? And just flush it out with this slide here. So let's design a plan that can keep you out of the nursing home. They usually like that. That's usually a good. Okay. Okay. So it's your choice. So we can design a long-term care plan is extremely flexible, and it is. I mean, I can design all kinds of things. I think there's going to be a Volkswagen Bug. No. Okay. This was the Volkswagen Bug. I have a picture of a Cadillac or a Volkswagen. I can design a plan for as little as $20 a month. I can design a plan for as little as $400 a month. I'd ask them, can you afford $20 a month? Yeah, we can afford that. Okay. Can you afford $400 a month? Nah, that might be a little too much. Okay. But would you agree you could afford something in between there? Right? Very natural. Let's put some money at this, even if it's, paying half the bill, maybe just getting some home care. Do you want to address some of these issues? Okay. So let's plan and we can do this on price, or we can do it on total quality of care. We can do it any way we want. All right. Progression of care. And this is where we talk about this. This is what happens. 85% of the time claims start at home. 87% of we see that care from unpaid caregivers. So we really want a policy that from day one is going to be able to pay family and friends. What happens? Well, the husband has a stroke. Well, the kids rally around. Maybe one kid, leaves work early for a week, then the other kid kicks in, and they're going to take care of them or maybe it's Mondays and Wednesdays. It's this child, that maybe the spouse comes home, or they have to retire early, or so family really is the first line of defense when someone gets sick, when someone comes home from the hospital, and that eventually tapers off as maybe family members have to go back to work or have to have other responsibilities. So you really need a policy that from day one is going to pay cash. Money that you could pay directly to your friend, your daughter, your neighbor, your church, whatever it is. You could pay anyone for anything. So that's the first, and again, that's for that home care need, and that's when you get that community-based and friends and neighbors and family helping you out. Okay, but next, you might not be able to do it. Your neighbor may not be a trained physical therapist or audiologist to help you with your stroke. So you may have to have professional nurses come to your house. Specialists, therapists, homemaker services, medical alert systems, that kind of stuff. So you need money to cover that too. You want a plan that's going to cover for keeping you at home with a regimen of basic and professional nursing care at home. Lastly, of course, not lastly, but you want to have some options. So, okay, I want to go to nursing home, but there's these nice assisted living facilities. It's really your own place. It's your own apartment. You just basically have, they have meals downstairs, but you can make your own. You watch TV. They come by, knock on your door once a night to make sure you're okay, make sure you're taking your meds. So it's kind of independent, but they also have congregate care facilities, Alzheimer's cares, personal care homes. There's a lot more of these things on the horizon, folks, but it's that step above the nursing home. Then, of course, the last resort, if you do have in a nursing home, we want a policy that's going to cover the nursing home. No prior hospitalizations, Alzheimer's covered, everything's guaranteed renewable for life. It's going to take care of you if God forbid I end up in a nursing home. okay? So plans can cover all 4 of these areas: the progression of care, family and friends, then maybe nursing care, then maybe assisted living, then nursing home. Long-term care plans are designed to cover all 4 levels. So let's design a plan for you, okay? And that's where I personally, I'm going to have let me escape this quick because we are only at 2:40, so give me like 5 more minutes here. So I would, and if you don't have it, bring the software up. Do I have the software up? I don't have the software even installed. How about that? Okay. I just got a computer crash here, so I've got Windows 11, if you guys can, I don't know if notice this or not, but consequently, I haven't just rebooted this new computer, so that we haven't put the software on there yet. But at this point, I would show them kind of how, we can design a plan for them that's inexpensive. I go right into the software, and I'll just pause for a little bit. So when I tell them let's design a plan for you, I kind of ask them, well, okay, first of all, you have to know your local areas. If you're in Kentucky or if you're in Massachusetts, there's a difference there as far as what kind of dollar amount. If I'm on the East Coast, I might start benefits at $6,000 a month, $7,000 a month. If I'm in Kentucky, I might start benefits at $4,000 a month. And that might even be low. It sounds low to people, but let's just say in Missouri, the average nursing home care is $6,000 a month. I'm not going to sell them $6,000 a month benefit unless they tell me that they don't care about, they don't care about premiums. They don't care about, most of my clients were premium sensitive. So they wanted me to design things that were more affordable. Okay. So you don't have to sell the whole amount. I would sell a $4,000 a month if the average local care was about $4,000, knowing these folks are going to have a Social Security income. They're going to have a pension income there. I just don't want them to go into the interest or the principal, right? So if they can just live off the interest, and when you leave your home and you go to a nursing home, you don't necessarily have a mortgage anymore. You don't have some of the bills you had before. So it's not like you need the long-term care plan to cover everything. And I think the mistakes that agents do is when they're designing a personalized plan, they look at the local cost. Well, it's $7,800 on average. So let's write you an $8,000 a month benefit, 5-year benefit plan, 4% inflation. And also the premium's 10 grand. Those people never look at long-term care again. So when I say I'm going to design a plan for you, I talk about their budgets. We talk about the local costs, and we try to design something that's affordable, that they can afford to keep. That's going to work out for everyone. If I have my software, I kind of show you a little bit about that. But okay. After gone through this, and maybe you're on Tommy's pivot presentation, where as you go through this and they tell me, oh, I've got a little bit of emphysema, or I've got COPD, or so you have to pivot to other plans or other products. As we go through here, you can pivot. This is just a straight presentation, so this is meant again just to this is for just the generic person who's pretty healthy. So we go through there. But if you've seen this, having seen this presentation, having seen the different tools GoldenCare has to offer, it is Long-Term Care Awareness Month. Some of our agents, we get bigger turnouts this time of year because people, agents say, look, I really want to do more of this. I know I should be doing more I don't want to get certified. I don't have time. And they come into whatever reason, they don't get it done. So with that in mind, we do have a referral program that I think is important to bring up. This referral program, this is for folks that say, look, let's see, swap slides here, bear with me. All right, that escape, okay. So just so you know, if you've got to the point where maybe you're just not sure you can do this, or you don't have the time to commit to the 8-hour partnership certification course, you only write 1 case a year, you should do more. If you want to get paid about 60% of that commission and not do anything, visit www.integrityltcdirect.com. You put in your email address, let them know who you are. Bill Jones from Joe Blow from Kokomo. Here's my email address. Here's the client's name I'd like you to reach out to. Tell your client that someone's gonna be calling you. We'll have one of our experts. When I say this, one of our experts, we have about 10 people that work in this program. These are people who have written, more than $100,000 to $200,000 of long-term care premium every year for the last 20 years. These are some of your top experts in the country, period. They are trained assassins, long-term care assassins. They are so good. They're going to walk you through every possible plan. They have the PowerPoints at their disposal. So if you want to do that and you feel like I just can't do this long-term care thing, it's just too much, then know that's an option. And I think it's a good option because some folks, again, they want to do more with it. For whatever reason, they get overwhelmed and they never quite take that step, and their clients end up not getting long-term care. So if you're the point where you've been kicking this thing around for a while and you want to do that, we have that available for you. We'll help solve it for you. So that's the referral program. IntegrityLTCdirect.com. Okay, with that, that's the end of our webinar. So listen, folks, I went through there. I hope it kind of helped you see some of the need creation in there. You're going to get a copy of this. I think Lynn will email it to you when we get done. But I want to thank you for this. And I also want you just to call us. Look, if you have a case you're working on, maybe you're not sure which product you should be pitching. Maybe you're just not sure if they have this, or maybe they have children concerns, or you want to have some extra research, or maybe it was a tax incentive slide. Maybe you'd like to see that brochure that tells someone that's a C Corp how to get more, whatever it is you possibly need. Maybe you need help designing a quote. Maybe you need a brochure. Whatever it is that you're looking for, call that 800 number there, 800-842-7799. Talk to a marketer. We'll help you. We'll get you started. We'll make you look real good. We'll design a plan from you. We'll game plan with you. Let us help you get started. That's what we do. That's what I do. So with that, I want to thank you guys. It's been 45 minutes. So thanks a lot for coming on board. Thanks for a great long-term care awareness month. We had a lot of good turnouts in our classes. So let us help you. And happy Thanksgiving and good luck selling out there.
Check out our website, GoldenCareAgent.com, or give us a call at 800-842-7799.